Good evening, VV Nation. My name is Ryan and welcome to the channel. Now, this will be my last video for 2023, so there's no better way to go out than just give you some wisdom from the man, the myth, the legend himself, Dr. Bart DeLito, aka Dr. D. Now, Dr. D always tries to put investors on the right side of the market, so I'm going to show you his little green book where there's a lot of valuable information, but focus on the greatest 6 myths of investing. Now, if this is something that you're interested in and you want to utilize some of his wisdom to be profitable in 2024, stick around and let's get started. Now, if you do have a subscription to VectorVest, all you have to do is just go to the training tab here. In the bottom right corner, you are able to download the book. Now, if you're not a subscriber, you'll simply go to our website, VectorVest.com, scroll on down, and then over on the left, you'll see the little green book. Now, this book, Stock Strategies and Common Sense by Dr. Bart DeLito, is free as a digital download. So even if you're not a subscriber, you can get his wisdom. All right, you can see here the first chapter in his book, the 6 greatest stock market myths. Now, myth number 1 is going to be price to earnings ratios tell you whether stocks are cheap or expensive. Now, PE ratios are easy to find. Just about every newspaper or TV guru will show you PE ratios. Now, VectorVest and Dr. DeLito, to truly understand how a company is worth, you need much more information. Now, the example that he utilized here is that if you were told Fly-By-Night Industries had a PE of 7 and Fantastic Plastics had a PE of 14, well, naturally you would think that Fly-By-Night Industries would be a better value solely on that information. Now, this couldn't be further from the truth. VectorVest here, we utilize things like interest rates, inflation, and forecasted data of earnings to truly find out what a stock is valued at. Now, we've got myth number 2. You must assume high risk to make good money in the stock market. Now, I get that all the time, actually, especially working on the phones here at VectorVest, that a lot of individuals out there just feel like the stock market is too risky. Now, in his book, you could see Dr. DeLito has 7 tips on how to make money in the market with low risk. The first is to buy safe, undervalued stocks. Buy stocks with double-digit earnings growth rates. Number 3, do not put more than 10% of your money into any single stock. That is a key message. Now, number 4, buy at least 10 stocks. This is great for diversifying your portfolio. Now, number 5, use stop loss orders to limit risk. Number 6, do not own more than 2 stocks in the same industry. And number 7, do not plunge into the market, spread your investments over time. I do love that. A lot of investors feel like they have to jump all in on a position. Well, me, naturally, it did take me some time. I've learned over the years from my mistakes, but that is key. I like to tiptoe into a position and then tiptoe out of a position. Now, myth number 3 is one of my favorites here. Buy stocks on the way down and sell on the way up. Now, I know that doesn't sound logical at all, but a lot of investors like buying the dip. Now, I do buy the dip sometimes. However, it's usually some kind of technical analysis based. However, I have learned over the past several years that riding with the wave and not fighting the momentum of what the stock is currently doing typically is easier and just works out better. Now, number 4, we can all relate to, especially over the past several years. The myth number 4 states stocks are a hedge against inflation. Well, this couldn't be any more wrong, because inflation, if it rises, that is not good for the stock market, because typically if inflation rises, well, interest rates are going to rise as well. And then you have a competition between fixed income assets and the stock market. So you'll see money moving out of the market into these fixed income assets when interest rates are rising. As we saw in 2022, with inflation as a problem, the market did not do good at all. And heeding this advice could have saved a lot of investors, especially you if you're watching this, probably a lot of money in 2022 when the market was not the place to be, at least if you were going to play it to the upside. Now, myth number 5, this actually does apply to me. Young people can't afford to take high risk. Now, the logic behind this is that individuals who are younger do have more time to recoup losses. Therefore, they should take more risk. Well, that doesn't make any sense to me. That's actually one of the cruelest things to do, especially since COVID. A lot of young retail traders have found themselves going into the market and learning mistakes the hard way. Now, let me read the statement from the book here. If any group needs to watch every penny, it's the young. They need money to start a family, buy a house, buy furniture, save for the future, and on and on. Furthermore, young people are usually at the low end of the earning scale. They have precious little disposable income. That is valuable information, especially if you're young and watching this. I've taken on a lot of risk myself as a trader, especially in the beginning, but I've learned to tame that risk and be happy with compounded gains over time. Now here's myth number 6, you cannot time the market. Well, that is probably one of the dumbest things I've ever heard, because working here at VectorVest, since 2014, I have actually learned to utilize the VectorVest 7 software and keep me on the right side of the market. So before I buy any individual stock or ETF, I always see what direction the market is going. In addition to that, I do look at proprietary indicators like MTI to show me when the market is overbought or oversold, so that way I can be ahead of the curve and get ready for the next movement in the market. All right, VV Nation, now I hope informing you about these 6 myths really opened your eyes and opened your minds to some new things going into 2024, so that way you could be profitable. Now, I know this video wasn't the most exciting. In addition to that, I didn't hand out any fish today, so for sticking to the end, I'm actually going to show you my favorite video of the VectorVest 7 software. It's actually 8 years old and by our founder, Dr. Alito. It's right here. To find it, you just go to YouTube, type in stock market cycles, put in VectorVest there. This video will pop up first, and it's called Stock Valuation and Stock Market Cycles by Dr. Bartolito. Now, I've loved this video so much, I've actually encouraged my mom to watch this video to help her in personal investing and better understand the stock market as a whole. Now, as always, if you enjoyed the content, make sure you hit that like button and subscribe to the channel. As well, check out the book. Good night.